Okay, it's 24th June. It's been just over a week since I did my last video. Uh, if you remember, I was talking about the weekly reversal, bearish reversal on the S&P. Then last week came and went basically straight up. So this bearish reversal remains unconfirmed. That being said, if you look at the past weekly bearish reversal that we've had, at the very least, we usually have a couple weeks of sideways action, at least, even if you don't have any type of big down move, or so. Now we're sort of second week into this, and we're still looking good on the strategic level, on the big picture. But again, that move last week, it was, it's kind of tough to be going into this week and buying tactical positions because I don't want to necessarily say we're overbought, but I think the risk reward is just not there tactically. So again, for the most part, when I'm talking, I'm mainly talking tactical. These are more tactical type of setups or tactical type developments. At some point they may develop into strategic developments, and again, but we will see those usually on the longer term time frame. Now the weekly is technically in between tactical and strategic. Again, it's relative to what your time frame is. So, if we had a couple, week or two going lower from this bearish reversal bar, then it may show up on a strategic level. But again, it hasn't. But that doesn't mean that the market right now is a roaring buy. Like I said, I think even this tactical setups I see, they just don't have much follow through. They'll have maybe a day of a little bit erratic movement higher, and then they, it's almost like you have to play a hot potato. You have to get out of it real quick, otherwise they're not going to work. So one interesting aspect of today is we actually opened lower and then they roared higher, which usually means when they go from red to green, and you had some pretty big moves, especially in some high beta stocks, Google and Netflix, to name just two, had some really incredible moves in the morning, and then it just had a pretty vicious reversal towards the mid to the end of the day. And you can see it here on the daily and the Nasdaq. I mean, we went all the way up here in the composite, almost 5,000. I'll take a pedal for 4,400. So we went 43.99.87, almost 4,400, and then they just beat it down pretty hard. That being said, it's a day to sort of take notice on the tactical side. We may get a few days of down movement or consolidation at best. If you look at the S&P, had the same type of move. Didn't go as high. The Nasdaq definitely outperformed there in the morning. But it's still well above the 21-day moving average, which is this line right here, and then the 50-day is still way down here. So you can tell these little trend lines I drew here. Here's these uptrend lines, and we kind of broke out of this range. We were sort of trading this range for a while. We kind of get up here, and then we kind of blew out. And in a way, it's almost a little bit of a reversion to the mean here. I mean, we kind of got a little bit overdone. So if the market comes into this range again, into here, we're still well good, for especially, like I said, strategically holding positions. This is not a time to be selling, but at the same point, if you're looking to hold a few positions for a few days or whatnot, now's not the time to be buying. In fact, you may want to look to some tactical shorts if we do get a day or two continuation off this reversal bar, and that may happen. And just of note, yesterday I actually had MX, a market extreme relative strength indicator popped on the bearish side on the S&P. So again, that risk reward long side was not there. In fact, the risk reward was to go short. And right now, the market, like I said, this MX extreme indications actually has acted very well in this market, from both the long and the short side. So that's it. I don't really have too much more. I mean, we'll see how this develops. Again, we may get a couple days lower. I mean, end of quarter here is a couple days, so who knows how they try to mark positions. So that comes into play as well. We'll see what happens. As far as individual stocks, we talked about Twitter. Twitter is actually acting extremely well. Went up to almost 40. Again, I sold my entire tactical position yesterday, or was it? No, actually, it was I think Friday. I might have sold my tactical position, right in the 38.5 area, and that's where we are now. So Twitter is doing pretty well. So we'll see. I mean, now obviously there's some resistance here. You can see this downtrend line. It's actually kind of bumped up against it. Next level of support should be at the very least 35 needs to hold. That was the prior breakout level. I'd love to see 36 and change hold. Basically hold above the breakout level would be more ideal. And then we'll see if we get some move back above 40. So we'll take a look at that. We definitely talked about the 3D printers. I sent you an email, Diego, a couple of days back last week, I believe. Actually, when DDD broke above these, I think it was 51.75 area, and it's actually been going higher. It caught a little bit of resistance at yesterday's high, so we'll see. One that was acting a little bit better, and I was holding for quite some time here is VJet, another 3D printer. So the buy level was down here at the $14 and change area, and it made a high of $19.20 today. So could use a rest, could use some consolidation. Of course, if you look at the long term, I mean, this stock was $70 in November. It's about $50 back in January, so this is, really gotten beaten down pretty hard. So we'll see. Could have some room to run higher if the 3D printers are any good. So we'll see. Those are good positions. Other than that, I don't have too much. Facebook's actually been doing okay. It kind of peaked above this level here, but because of market weakness, got beaten back down above its moving averages. So that's doing pretty well. Netflix is the one that we've traded quite well in this whole move, all the way back from 330. Today had a great day in the morning, and then look at that, it's a pretty ugly chart on the daily. It also had some pretty big volume here, so there may be some follow through to the downside in Netflix, so just be aware of that. And again, I just don't have too much positions. I was in a little bit of Baidu. Baidu is actually acting one of the better high betas here. It's had a 2-day run here, had a really decent run today. And that's it. Just tactically, you need to keep an eye out for potential lowers and consolidation. Nothing to be alarmed about. It's actually would be quite healthy. Like to see how stocks hold up in that, and we're looking for relative strength. We'll see stocks that are holding up well into any down move, and those are the ones we'll go to when the market turns and works off some of this, works off the recent strengths that we've had that we need to basically, again, we need to work off this MX bearish type stuff. So we'll see. Anyway, that's all I got. I'll keep an eye out for, and we'll get back to you next week. All right. Take care, man.